JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 18th of March 2021. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at yesterday, some new ones. But as always, before we do that, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here on is Nikkei 225. So beautiful move here above this area. So this is what I talked about. If we get a pop above the 30,000 mark, then of course it opens the door towards slightly higher levels where we could then target the 30,714.15 mark, which is the highest point of February. And as you can see, yesterday today we did have a nice good move here. Didn't really quite reach that highest point of February, but nevertheless, everything's still looking quite positive here. And yep, for now, that's what I'm going to be aiming here for. I'm going to be aiming for that highest point of February, and then we'll take it from there. If it clears that, then yes, of course, higher levels could be met, but at the moment, let's keep it short and simple, guys, because again, other indices across the globe, like the DAX and the US ones, are hitting their all-time highs. So if they suddenly reverse to the downside for a bit of a correction, then yep, they might drag Nikkei after them. But again, let's not over speculate on this one too much. Let's first, for now, we'll stick to the idea here is if the price continues to trade above the 30,000 mark, then there is still a good chance for this one to drift lower. If it falls below it, then we'll take a bit of a neutral stand here. But if it starts falling somewhere below the 21-day EMA and below the 29,519 zone right here, then yes, we could maybe go for a bit of a corrective move here to the downside. But we'll get to that point if we see that move. NASDAQ 100. So looking at this picture here, you can see that. So basically, let me recap what I've said yesterday. So the idea of what I mentioned yesterday was that, and when we opened during my trader's tea time, when we opened below this area, below this 13,057, I said that if it stays below this 21-day EMA, then we'll get ourselves a nice little island reversal here. But as you can see, this is one of the reasons why I always say to you guys, wait for that daily candle to end, because this is where probably a lot of traders got caught out, and because the index did drift back above the 13,057 territory and ended up let's say filling this little gap here and staying within the range, closing within the range of the previous day. Also, it failed to push further above the 13,302 zone. Excuse me. So this just kind of points out to the strength of this barrier, and it means that in order to go for some higher levels right now, well, wait for that push above that area, above this 13,300 zone. Currently, the price index, the cash index, is trading near the 13,214 mark. So yep, slightly above yesterday's close, but still below that 13,300 territory. So yep, that's what I said. That's why I need that push above this barrier first before, let's say, getting a little bit more excited with the upside. Jumping into DAX, the German index. So yesterday the index closed just fractionally above this barrier, above this previous all-time high, created a new all-time high. But the more important activity, or I should say, happened during or in after hours when the German index just followed after the US ones, and yep, continues to accelerate. And today, right now, I mean, the cash index is balancing around the 14,716.15 territory. So yeah, I mean, it's going to be very interesting. We'll have ourselves a nice little gap here to the upside. This, of course, means that yes, this idea worked out nicely. What I said before was that in order to go for some higher levels, we need to see a break of this 14,595 territory, and ideally a daily candle staying above it. So yep, that kind of worked out. And yeah, I mean, now it's going to be a little bit tricky. I'll pick up on DAX later on and during my trader's tea time, just to see what we can squeeze out of it later on. But for now, guys, everything's kind of looking quite positive. Of course, at some point we will get that little correction to the downside, but at the moment everything's still looking quite positive, guys. So keep your eyes on that one. I can see in the chat room, good morning to you too, Karsten. Yep, I hope you're having a wonderful start of the day. So jumping into another index here, the FTSE 100, and yep, similar story. We're waiting here for a nice good pop above this 6,800 zone, but so far we're not getting that because, well, the British pound is on the stronger side recently. So that's why basically for now what I'm going to say here is that keep your eyes on the British pound. Of course, keep your eyes on the data relating to UK. And let me just quickly check if we do have anything today for UK. No, yes, sorry, yes, we do. Oh, yes, the BOE, the interest rate decision. However, there are no expectations there. The expectation is for the same rate to come out. I mean, no surprises in the expectations. But of course, it will be very interesting to see if there will be any changes in the NPC votes. So in the members of the MPC and how they will vote, if there will be any discrepancies. For so far, it is expected that all 9 will vote in the same way. But yeah, again, if that somehow changes a little bit, if there is a slight decline, or should I say there is somebody who wants to change, then yep, this is where we could see a bit more fluctuation in the British pound. But again, coming back to the FTSE 100 here, so yep, keep your eyes on this barrier. If we finally get that pop above it, then yes, higher levels could be met. Currently, the cash index is trading at around 6,788 zone. DXY, so drifted lower, and yeah, I mean, this is what I talked about recently. I said that if we get a drop below that 91.36 territory right here, and we also get a drop below the 21-day EMA, then yes, lower levels could be met. So so far so good in regards for the bears, but again, we need that stronger move below that 21-day EMA in order to go for further declines. My next target will be this 91.05 territory or this 90.63 mark. In case this suddenly reverses back up here, I need to see maybe a push above the 91.96 territory at least, or if you want, you can keep an eye on that 92 zone, and then yep, we could go for the upside again. Gold, so failed to stay below that 1740 zone, and this is what I said to you guys, be very careful. We were near that key resistance area, and the most important, we've pushed higher. Yesterday we failed to stay above this downside line taken from the high of the 6th of January, but today we're seeing a further push north. However, so this is where you need to be very careful. So given that yesterday we still remained below the 21-day EMA and below this downside line, although we overshot the 1740 zone, the fact that it's pushing higher today, I mean, still there is a chance that we could see this as a potential little false breakout. So yeah, I mean, that's where it could be a little bit could be tricky here. So for example, keep your eyes on this one today, and that's why, for example, I have my upside scenario starting from around the 1760 mark. And if we get breakthrough that, then yes, higher levels could be met. But if it suddenly, let's say, it pushes higher, fails to move above the 1760 mark, and then reverses back down and suddenly falls back below the downside line, well, maybe the bulls are not really ready to drive this one further north. So yep, keep your eyes on that scenario. WTI Oil, very quickly on this, still keeping an eye on the potential descending triangle pattern here on in the short run. However, you can see that this is slowly kind of grinding lower. Now, this reminds me, let me just remind myself something. This is just a the so-called bearish 3 and bullish 3. I think that's what I'm trying to remember here. I do apologize, guys, for this one. It kind of slipped out of my mind here. But sometimes these patterns here tend to be quite, in this specific one, tends to be a bullish one, because when we have a strong candle, let's say to the upside, and then the following few candles are just kind of, let's say, trading within almost within the range of the bigger one here, that could be seen as a positive sign. So we could see this one reversing to the upside. We could see it pushing higher. But again, like I said, it's I don't want to lie on this one, guys. This totally slipped out of my mind, but okay, I'll pick up on this one later, maybe in during my trader's tea time here today. So, but as I said, guys, this could be seen as a potential bullish sign. However, we do have a bit of a conflict here, because again, on one hand, we could be seeing this as a potential bullish sign, but on the other hand, this pattern here could be seen as a descending triangle, which tends to break to the downside. So that's why probably I'm gonna wait for a breakout first. And if this 63.80 zone gets violated and we see the daily candle remaining below it, then I'll go for a bit of a larger correction to the downside. But on the upside, I would say, if let me just adjust a few levels here. Probably need to get rid of some of these. And for the upside, what I would prefer, although not only a break of that this downside line, but also maybe a push somewhere above this area, the 66.20, 18, something like that. So a nice good pop above this may open the door towards higher levels, and then yes, we could go for a further move higher. Now jumping into Bitcoin here, as you can see, the crypto managed to rebound from this upside line. I talked about this, guys, and I've mentioned this in the beginning of this week. So yep, and now the big question here is, can it stay above the highest point of February, because this is where it's currently trading at, above that area, above that 58,321 zone. So if it can stay above it, then yes, my next target is the all-time high near the 61,700 zone. So if we get a test of that, then it's going to be interesting to see if we can clear that level. And if so, then of course this confirms a forthcoming higher high, and well, I mean, the sky's the limit for this one. Then for the downside, I need to see at least a break of this short-term upside line here, taken from the low, the 28th of February, in order to consider a bit of a, let's say, larger correction to the downside. AUD USD, so pushing nicely above this barrier here. I talked about this pair, and basically the 0.7820 zone is getting violated. The big question here is, can we stay above it? So we're getting back above this upside line as well, so a lot of positivity here on this pair. And if we stay above the 0.7820 zone, then of course, yes, my next target is the psychological 0.80 territory, or maybe slightly above it. For the downside, I need to see, and this is where I'm going to adjust my levels a little bit here. For the downside, I would need to see a drop below this 0.7692 territory first. This kind of acted as a good area of support. So, yep, a nice good drop below it may strengthen the bearish case, and yep, more sellers could join in. AUD/NZD very quickly on this, so pushing back to this downside line. I talked about it, and yep, guys, for now everything's looking quite positive here. I wouldn't say maybe too positive, but somewhat positive. However, the kind of the more bullish case could come here on a break of this downside line and a push above the 1.0819 territory, which is marked by the current highest point of March. Nice good break above it would confirm a forthcoming higher high and for this month, and then yes, a further move higher could be possible. Initially, then we'll target the highest point of January, but if that gets cleared, then yes, well, a further move higher could be possible. USDCHF very quickly on this. So we managed to almost reach this short-term upside support line drawn from the low of the 16th of February here. So yep, for now I'm gonna take a bit of a careful approach here, and for, let's say, in order to consider further declines, well, I would like to maybe wait for a violation of this upside line and maybe a drop below the 0.9190 zone here, 97, something like that, 97, yep, a little bit more to that, and then yes, go for further declines. For now, because we are at a very interesting spot here. I mean, we're very close to this upside line, so let's see if this is going to provide some sort of support. If it does, then we could see a nice rebound and a push higher. However, as I mentioned before, in order to get a little bit more excited with the upside, a push back above the 0.9296 territory would be needed. GBPNZD. So a quick update. I talked about this pair yesterday. So it moved away from the 1.9418 zone, and this is what I said. We need that break, and we need that daily candles to stay above this area in order to go for some higher levels. But we didn't really get that, and instead the pair drifted back down. However, on the positive note, it still remains above some of its EMAs here and above this upside support line drawn from the low of the 7th of January. So yep, that's why for now, guys, I would say that if you want to go for some higher levels, still wait for that strong pop above the 1.9418 territory. If you want to go for lower areas, well, I mean, of course, a violation of this upside line would be needed. Of course, I do understand that we could be missing out on a bit of territory here, but we'd rather be a little bit on the safe side here. Euro-Aussie quick update, and this is one of those situations where I keep saying to you guys, wait for that daily candle. So yesterday when I talked about it, I said that there could be a possibility that this might be seen as a potential falling wedge pattern. Yesterday during my Traders Tea time, we were pushing nicely to the upside, but I said that if you want to go for some higher levels, well, first of all, a break through the upper side is required, and then in this specific situation, a break of this downside line is required as well. But we didn't really get neither of that, and we can see that the pair found resistance once again near the 21-day EMA and drifted back down, and now it's kind of violating the lower side of the falling wedge, so which means that we can actually get rid of this idea. So this is one of those where, I mean, it doesn't, if you think that it could work out but it doesn't work out, but well, you just have to go with the flow, guys, here. And now what I'm keeping an eye on here is the lowest point of February near the 1.5253 mark. A nice good drop below this would confirm a forthcoming lower low, and further declines could be possible. Again, until we get that, I mean, we're not really talking about, let's say getting comfortable with lower areas. We need that daily candle to stay below this hurdle, below this lowest point of February, and then yes, we could go for further declines. Euro-USD, so pushing nicely to the upside, and yeah, there we go. The pair is climbing back to this 1.1990 zone, and if you remember yesterday, I said that in order to go for some higher levels, we need to see a pop above this area. Well, again, we're waiting for that. We're very close to that, but we're still not getting that. So that's why I'm going to still stick to the kind of the cautious approach here, because even if we see a push above the 1.1990 zone, we do have these EMAs here which could provide resistance. So, and that's why I had my main scenario from the from my main upside scenario from the 1.2023 territory right here. So if we don't get that push above it, then of course it will be very tricky here. I mean, we could start oscillating around these EMAs and it could be a bit of a mess. So again, probably the way you could approach this, if we get a pop above this 1.1990, yes, we could start looking at some higher levels. We could have a very tight stop loss here, because in case this suddenly, let's say, finds resistance somewhere around here and then sharply reverses to the downside, then at least you're protected. But if it starts pushing further north and then clears the 1.2023 territory, now this is where it could become very interesting for a few more buyers, at least in the near term, because we could then target this downside line taken from the high of the 6th of January. For the downside, I would need to see at least a drop below the 1.1881 territory here in order to go for further, or should I say, I wouldn't say further, but slightly lower areas. So guys, that's it for this session. I hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate your likes, guys, your views. I really do. So thank you very much for those. If you want to catch my video later on, my trader's tea time is always 13:30 GMT. We'll have a look at some of these instruments, some new ones, and then we'll take it from there. So, yep, have a wonderful trading day, and I'll see you later. Thank you very much, and bye-bye.